Another interesting week and another interesting episode of Market Wrap with Pankaj Pandey sir. सर मार्केट्स मतलब कहा तो जाता ही है कि हमेशा ही इंटरेस्टिंग रहते हैं और मजा देते हैं, बट आई मीन दिस वीक इन इटसेल्फ वाज समथिंग अगेन. क्या हुआ मार्केट में? वुड लव टू हियर फ्रॉम यू इन योर वर्ड्स.
So hi, good evening, Vishu. See, overall, there is a saying that sell in May and go away, but I think this does not work out in election years. That is what we have seen in the last 4, 5 instances. This week also we are seeing something similar. Indian markets clearly have sort of done well. The first 4 days of the week, we have seen about 1.5% kind of a gain. While there is some profit taking which has happened on Friday, but overall Indian markets continue to outperform global markets and largely anchored by Bank Nifty. So Bank Nifty is obviously the heavyweight, so Bank Nifty is sort of helping. I think good part is that we've seen crude oil prices softening because the overall geopolitical tensions have sort of come down a bit and market breadth is good. So what we have been sort of saying for some time is that we are headed for a pre-election rally. While stock-specific action will continue to happen given the reserve season is ongoing, but overall sense is that the Nifty is headed higher towards new life highs. So 23,400 is what we would expect for this month. So I think markets are looking good. So that way I think we continue to sort of outperform global markets.
Right, sir. And I think a lot of tensions that have been going on in the recent times, be it the global conflicts, the US Fed things, and they have also kind of started to stabilize with US Fed saying, "Ki, theek hai, abhi, for now we'll take a pause," while keeping a check, of course. And the election bit also, people, I think, getting comfortable with all of these macroeconomic scenarios. Is that also the case, sir?
Absolutely. I think Fed people are sort of resigned to the fact that you will not see multiple round of rate cuts. I think जब ये साल शुरुआत हुआ तो 5 से 6 रेट कट का बात हो रहा था, but now with latest Fed commentary, एक rate cut is what is expected this year. So higher rates for longer period of time is what I think US Fed is clearly sort of highlighting. But good part is that जो आपकी geopolitical tensions have, those have sort of come down. You've seen crude sort of declining, and our sense is that it could see further decline going forward. So from that perspective, overall the setup, which looked weak, I think has sort of improved a lot, and which is helping our markets to sort of outperform.
Right, sir. Sir, another factor that market is looking up to these days is the results, of course. So, what are some of the highlights of this week in terms of Q4 24 results?
So I think when you sort of look at some of the numbers have come out to be quite decent. IT numbers continue to remain soft. I mean, to highlight, say, for example, Coal India has been our top pick. Our target price is 550. Now, this company has come out with good set of numbers. Their volumes are one of the highest quarterly sales what we have seen up till now. And there was an expectation that e-auction volumes prices, because the company had guided for 55 to 60% sort of a premium or the kind of discount of what they've guided earlier. Now those numbers or realizations have come out better, and I think a good part is that the EBITDA improvement is also significant. Part of that is technical because see, any mine when you have to develop, you remove the overburden, and that is a cost associated with it. So a portion of it, so which is why the EBITDA margins are looking quite high. It's up about more than 500 bips. But overall, very good sort of numbers, I would say. I think there's another company, Coforge. Coforge has seen a good amount of knock today. One, I think the overall turnover growth has been quite decent. So the turnover growth for this year overall has been about 12%. This quarter, we have seen about closer to 2% kind of a constant currency growth. But this company has been historically guiding for forward growth, and this year they have refrained from doing, and which is sort of making the market sort of clueless in terms of what to do with stock like this. Another challenge has been for this company is that so they have acquired a company called Signity. Now valuations look reasonable at 3 times sales, but this company is into digital assurance and testing. Now our sense is that this is one segment which will see a good amount of knock post Gen AI adoption. So somewhere down the line, the longevity of the business is where the market is not, or we are not drawing that comfort. And this is at a 12% kind of a margin business. The company's margin profile is 17, 18 odd percent. So it's margin dilutive, and plus on top of it is since you are acquiring, so there'll be some dilution. So I think uh, tier one has already sort of disappointed in IT, and I think tier two continues to sort of disappoint. Although the growth has been relatively better, but they have been sort of getting better valuations. So from that perspective, there is a bit of a letdown in Q4. I'm not too sure whether we are going to sort of keep a buy on this.
Right, sir. I think past few weeks हमारे weekly hidden gems में battery sector was the highlight for continuously, and Exide has also come up with some exciting numbers.
Absolutely. I think battery is one space which is doing very well. One should see the fact that whenever you buy a new vehicle, typically after 3 years, the replacement demand sort of picks up. And which is what we are also sort of seeing in the battery as a space. So Excite came out with a decent set of numbers, 13% kind of a growth. Margin profile was also sort of better. And so while the traditional business is doing okay, we have been liking this company largely from the perspective that this is the first company which is tied up with Hyundai for lithium-ion battery space. They are doing quite a big kind of a capex there. So that should lead to further re-rating of the stock, and the stock has already done well, and we have further re-rated or we have raised the target prices to 550. And there's still valuation comfort in the stock. Not only this, even we have been liking Maharaja batteries also. Let the numbers sort of come out, but Excite definitely is looking quite exciting.
Right, sir. Sir, another space that I think there was a recently we released a report this week, which was Bank Nifty to do the heavy lifting. And so one is, could we have a view on that as well? Ki what is happening there in that report? And also, I think we had a few numbers in the finance as well. I think Shriram Finance and Federal Bank came up with their numbers. So what happened in this sector?
So I'll start with a bit negative news flows. So Kotak Mahindra Bank continues to sort of deliver negative surprises. I think there was a key top level resignation there, and obviously that has implications in terms of how the future growth will pan out. And on top of it, we have already seen RBI sort of banning digital onboarding of new customers. So obviously that is sort of having an impact, but you have some of the other stable names like Axis Bank doing well. I think the numbers overall continue to remain decent for some of the banks which have come out. I think Shriram Finance has come out with good set of numbers. See, the story there is that they are growing their non-CV book at a pretty fast pace and with a good margin profile. And which is why I feel that even with 1.4 time book value, it's quite attractive. And I think Federal Bank is there in the news for multiple reasons. While there is an expectation that you'll see a change in environment from September onwards, market is speculating probably that a person from the Kotak Bank might join, but it's again remains to be seen. But having said that, their numbers were quite good. They delivered 20% kind of a growth on advances, 18% kind of a deposit growth, which is quite healthy. Margin profile has seen a sort of a uptake. And best part is that overall ROAs are expected to improve for this bank from 1.2 to 1.3, and it is still trading at 1.1. So our sense is that this is one bank which can sort of do well. In general, banking numbers have been quite decent. I think the overall sense is that in the second half, when the interest rates sort of come down, I think the pressure on the margins is going to sort of ease off a bit. So from that perspective, we have been saying that banks which have not done well ideally should sort of keep doing well or incrementally should do more better. And which is why I feel that the heavy lifting has to come from some of these banks, and that should sort of help Nifty achieve new highs.
Right. Sir, I think another sector which may have a huge bearing on the markets is the bearing sector. So, what's looking up there, sir?
So bearing is a very interesting sector, and it's bearing is actually goes into each and every sector. If you sort of look at wherever you are sort of moving good, be it auto, be it a lot of industrial products. I think bearing we started liking. I think and our confidence sort of improving with the Schaeffler numbers. Although we don't track Schaeffler. But their export growth has been pretty good, and which is why I feel that the other two companies, which is SKF and Timken, ideally should do well. Timken has got 25% of the revenues coming from exports, and export has been a segment which has been lagging for these companies. SKF has a relatively lesser. So, one, there is an export revival expected. Then the other fact is that railway is undergoing a huge capex, and both these companies have got decent amount of exposure to the railway side. And the other thing is that when you look at the process industries, I mean, be it cement, be it steel, or be it other sectors, power, I think every sector there's a requirement for bearing. And our sense is that with this kind of a strong capex, both the companies should do well. So, which is why I feel that Timken should deliver 15% kind of a growth the next 2 years. Last year, there was no growth. And I think margin profile should be better. Profit growth could be about 23%. And which is why we have a target price of 3950 on this. I think something similar for SKF in the, also, although their growth is going to be a bit lesser, 10% top line growth and 17-18% kind of a bottom line growth. But that is also sort of quite decent stock with a target price of 6060. So bearing is one category in the entire capital goods space which has not done well, and now we are seeing green shoots in terms of export pickup for some of the companies.
Right. Awesome, sir. Sir, and of course, finally coming to the highlight of the episode, your hidden gem of the week.
So pharma has been sort of buzzing. I've been also sort of highlighting that CRAMS as a space is sort of doing well. So what I'm recommending is Glenmark Life Sciences with a target price of 1040. Now, this company derives 93% of their revenues from API segment, and our sense is that API is one segment which the government is going to focus on going forward. The balance 7% comes from CDMO. Now, this company used to be a part of Glenmark Pharma, but now has been sort of spin off and now being acquired by Nirma. So, our sense is that one, they'll get a lot more freedom to sort of do capex because Glenmark Pharma used to have challenges, especially on the debt side. So this company will go aggressive on the capex side. They're already sort of looking to double their capacities of reactors, and margin profile for this company is already good, 29 to 31% kind of a range. The CDMO business also is there. They are saying that they are looking to sort of double these revenues by FY27. So this company is expected to deliver pretty good sort of a growth with better margins, and which is why I feel at valuations of 16, 17, it's quite an attractive stock to be bought, and which is why we're recommending one should buy the stock with a target price of 1040.
Awesome. This was great, sir. Thank you so much once again for taking out time for us and helping us in our journey of stock markets. We'll be back next week with another weekly wrap. Till then, have a good week, have a green week, and a very good weekend. Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.